The yen continued to weaken to a 5-year low against the greenback amidst market speculation that the Bank of Japan's obsession with reaching its 2% inflation target by the end of 2015 will continue its unprecedented quantitative easing program with the backdrop of the Fed's gradually tapering off its $85 billion a month quantitative easing program. Good morning, everybody. Welcome back from your Christmas break. Today is the 27th of December. It's now 12 p.m. Auckland time. This is your Forex market commentary brought to you by REAL ECN. So today's discussion, we're going to talk about the dollar-yen market. Up front, we're going to talk and look at the technical front. So looking at this chart, as you can see, since October, the dollar-yen market saw a rally after the formation of a W bottom of the Bollinger Band. From November onwards, we begin to see that the dollar-yen trend continued to close above the upper band of the Bollinger, which is indicative of a strong bullish momentum continue to lift the trend higher, largely due to a strong dollar fundamental because the non-farm payroll came out stronger, a lower unemployment rate in the US to 7%, and Fed tapering materialize. All in all, that gives into building up the bullish momentum for the dollar. All technical indicators signal a strong bullish momentum on the dollar-yen. This can potentially give the yen an upward buying momentum to push through the resistance level and possibly close above the short-term mark resistance of 104.8 at the end of today's trading session. So having a look at the collection of technical indicators on the dollar-yen market, it suggests a medium to long-term bullish market sentiment on the dollar and recommends short position of the yen. So having a closer look on these technical indicators, let's have a look at the MACD, which is the moving average conversion divergence. Supports the bullish momentum story as the 12-day EMA sits above the 26-day EMA. So right now it's sitting at 0.9, which is giving us a technical recommendation of a buy. Moving down a notch to ADX index sits above the 20, shows the beginning for a strong upward trend and show that strength is gaining traction. So right now it's sitting at 23.518, which is also indicate a buy signal. So coming down to CCI, which is Commodity Channel Index, again it shows a buy signal in the market as the number come out above 100. It's sitting at 128.3636. Moving down to Ultimate Oscillator, it comes out above 50. Remember, above 50 shows that the market is gathering strong bullish momentum. It's now sitting at 66.6, which also signal a buy. Lastly, we're going to look at the bull to bear power ratio index. So it sits at 1.5. It shows that the market sentiment on the dollar-yen market is heavily in the bull market. So overall, the technical market consensus shows 8 buy, 0 sell to neutral with the overall recommendation of a strong buy. So the market is recommending long dollar-yen position. So now it's time to move on to the technical front. So the Bank of Japan is highly concerned about the sluggish economic and employment growth number and weaker than expected CPI number, all begs the question that is the recovery story in Japan is beginning to lose traction, allowing speculators to upgrade expectation for further accommodative measure taken by the BOJ moving forward. Over in the United States, a recent unemployment claim report show a drop by 42K to 338K, beating economists' expectation of a drop to 345K for the medium forecast, proving that U.S. economy recovery story is robust and it is in line with the Fed tapering's action. After the release of yesterday's BOJ monetary policy meeting minutes, the dollar-yen market saw a rally on the back of Bank of Japan pledge to continue its current rate of 60 to 70 trillion yen a month of QE program. Bank of Japan also reiterated to the market that it has upgraded its inflation expectation with Japan's CPI year-on-year number will release today at 18:30 GMT time, along with retail year-on-year sales report, which underlines consumers' confidence. During the April Bank of Japan policy meeting, Kuroda's announced that it would double its monetary base by 2014, which largely comprised of purchasing long-term Japanese government bond aimed to suppress the yield curve, as well as its policy mandate to achieve inflation target of 2% by the end of 2015. This aggressive easing stand taken by the Bank of Japan shocked the market back in April, which caused speculators to pile onto a one-sided short yen trade, giving the market enough bullish momentum to break through the psychological $100 yen level. Bank of Japan remains to keep its overnight key lending rate at between 0 to 0.1%. It is important to understand the inverse correlation between the yen and the Nikkei 225 equity index. So as you can see on this chart, the dollar-yen market is highly correlated with the Nikkei 225. So in a nutshell, if you see a rally in Nikkei 225, we will see also a rally in dollar-yen with opposite relationship that a weakening of the yen will take place. On an annualized basis, the dollar-yen market has a correlation index of 0.44, which is pretty high right now to the Nikkei. The yen decline is also seen as beneficial to export-oriented Japanese corporations, as weaker yen advances their competitiveness in the marketplace, which later translate to higher quarter-on-quarter earnings, as well as corporate share prices, which largely underline recent Nikkei's rally. Like the greenback, the Japanese yen is also considered a safe haven. So upon improving economic data, investors' risk appetites also increase for the demand of high-yielding Japanese equity over the 0% Japanese corporate bond. So roughly speaking, if the economy is doing well, we will see a weakening in the yen. When Japan releases annualized Q3 GDP data showing a rise of 1.1%, with the Bank of Japan predicting a 1.5 GDP year-on-year growth in 2014, this has proven negative for the yen. The Bank of Japan mandate focuses more on the CPI number, so a strong or a growth in GDP has less discussion power during the Bank of Japan meeting. BOJ expects 2014 core inflation to reach the 1.3% mark and 1.9% by 2015. This signals to the market that the Bank of Japan will maintain its accommodative posture until 2015 before exploring any monetary tightening action. Since the election of Prime Minister Shinzo Abe and the implementations of Abenomics policy to stimulate the stagnated Japanese economy, it would be an understatement to say that the 2013 yen weakening trend was attributed to that. Abenomics composed of three key policies aiming to fix the economy through 1, fiscal stimulus, 2, monetary stimulation, and lastly, 3, loosening of business regulations. The recent discussion to increase sales tax of 8% in September from 5% in April will prove to drag on consumer sentiment and consumption. As we know, a slowdown in consumers' confidence can largely affect corporate earnings and potentially cap further Nikkei rally. Since the Nikkei is highly correlated with the dollar-yen market, it's important to pay close attention to today's release of retail sales report. So that's all for today's, and have a good trading day, everybody.